Yo, so what's up guys? Today I'm going to be teaching you guys how to use support and resistance. For beginners that don't know how to use support and resistance, support and resistance is basically like the most easiest strategy to use out there and the most like compulsory strategy to use. So guys, let's get on to the video right now. So we're on go chart, but first of all I'm going to explain what support and resistance is. Support is like the floor, resistance is like the roof. I'm going to explain it in terms of buildings. Let me say I'm in this floor right now. The person below me, which this floor is my support. The person below me, this floor is going to be their resistance to them. While they're looking at it from up, it's going to be their resistance for them, and they're going to have their own floor, which is below. So basically, that's what support and resistance is. Let's say if he's in his resistance zone, if he breaks the resistance zone, he's going to, that his old resistance is going to become a new support for him, and he's going to have a new resistance. So basically, that's what support and resistance is. So I'm going to explain it in trading form so you guys can understand. So yeah, let's get onto the chart right now and do this shit. So support and resistance is basically key levels, so that you guys can understand. It's basically key levels which the market react from. That's how traders make their decision in whether they're going to buy or sell. So I'm going to explain how to use support and resistance right now. Right here, this is the key level right here, as you guys can see. So I'm going to have our horizontal line right there, and I'm going to put a rectangle right here. So it's going to be a good number because institutions don't just buy from any kind of number, like let's say 3,000, 3,400 and something point some blah blah blah. They don't do shit like that. They are probably going to go with 3,500, a decent number, 3,500, 3,450, like a decent number. So basically that's what institution will probably go with. So I'm going to put our horizontal line in right here. Is going to be okay, 3,450. So I'm going to get our rectangle. I'll put a shade here too. Okay, this is our resistance right here, as you guys can see. Our next key level zone is going to be our support, and which is right here, as you guys can see, in 3,300. That's another key level zone. So I'm going to put our horizontal line right there, 3,300. And we're going to have our, okay, take that out. We're going to have our rectangle right here. Okay, and our next key level, you guys can probably guess it, is going to be right here. Yeah, 3,150. That's where the next key level is going to be at. Okay, I'm pretty slow at this shit. Let's get the rectangle there. Okay. So basically, these are the key levels that markets react from. As you guys can see, this is basically when the trends are going and it hit a particular support or resistance zone and the market react and bounce off that zone. That is why support and resistance work, and this is why people use it to trade it. People usually go with, when it gets to resistance zone, people sell it down. When it gets to support zone, people buy it back up. So basically, that's how people trade it. So yeah, I'm going to explain how I use support and resistance and how I trade it with my own confluences. So we're going to get onto it right now. We're going to go to the 4-hour time frame. We're going to go down 4-hour time frame. So basically, this right here is basically like a fake out. Basically, markets breaking out from the zone to confuse people that is going to buy up and sells back down. That's basically what that is a market breakout and retest. So we're going to get onto it right now. As you guys can see, we have another thing called mini support zone and mini resistance zone. So I'm going to show you how those look like right now. So I call it my multiple touch. So I'm going to show you how to use multiple touch right here. We're going to drop this to a lower standard. First standard and it slashed up. Nope. The other one, yeah. I'm going to change the color too. Red. Red should be good. Okay. So why I call it multiple touch is because market retest, touch the level, bounce back down, touch the level, bounce back down. That's why it's called the multiple touch. So as you guys can see, we had a touch here, another touch here too, touch here, touch here. A consolidation going on right here, and another touch. So the next zone is going to be here. How many touch do we have here? 1, 2, 3, 4, 5, 6, 7, 8, which the market is going to open this week, and I'm probably sure it's going to retest from this zone. As you can see, it's already giving me that kind of feeling that buyers are not strong enough. They are not pushing the market up anymore. So sellers are kind of coming in the game. So basically, we might have a retest. We might have a retest, and sellers might come in to sell the market. So the next zone is going to be around here. Clean. Next zone around here. Clean. I can already tell it has multiple touch. As you guys can see, you guys understand what I'm trying to say. Multiple touch is like a touch that market bounce off from, and that's like it shows a mini key level that you can as well tell when you trade in that. You can predict that market is going to come here and consolidate. Are you going to probably hold the trade, or you're going to leave the trade and take your profit off and find another entry, or you're going to just go through the consolidation that will happen, or the retest that will happen, or the bounce back that will happen in that point. So basically, that's how I use my multiple touch, and I'm showing you guys so you guys can see too. So the next touch is going to be around here. Okay. And the final touch is going to be around here. As you guys can see, this is multiple touch. And now I have my multiple touch. I already know this market overall from here is an uptrend. Market coming down, break of structure. We have a break of structure right here. Market coming down. We break it, and we're coming down to the downside. We're having a lower high. We're having a lower low, lower high, lower low. Market broke this lower high right here, giving us a higher high. Market bounced off again, and we're having a new higher high. Market came down, breaking this, giving us a lower high, lower low, lower high, lower low, lower high. This lower high failed to create another new lower low. Then we had to we had a break of structure, boom, and that is that. And I'm going to predict that the market is going to come and resist from here. We'll have a new higher high here, and market is going to touch this former higher high, and we're going to bounce off, creating another new higher high. So that's what I predict. So right now, the next move I will make, let me show you. According to this, the next move I'll make is I'll get my Fibonacci retracement and go from here. Once the market already got here, once the market already got to this resistance zone right here, I'm expecting the market to sell back down. So I'm going to get my Fibonacci retracement and put it in the higher high, as you guys can see, bringing the lower low, putting the 0.0 extension in the lower low, creating another new high high, hitting the 38.2 extension, 50 extension. Then I have my sell from here. Then once the market touch this right here, I'm going to have this right here. And put my stop loss right here and bring this way down to negative 27 extension, or the negative 61.8 extension, and having a 1 to 3 risk reward trade, or having a 2 risk reward trade. So basically, that's what Fibonacci retracement is. It's easy to use. It works well with my support and resistance. Or if I didn't make my entry in this particular zone right here, there's another zone I would have made my entry right here, probably, definitely, right here. Once I get to the 50 extension right here, I'll be planning I'll be planning to sell and put my stop loss above the 61.80 extension right here. As you guys can see, we're having a wiki zone right here. I'll put it here. So I'm going to bring this way down. I'll bring it to negative 27 extension and hit my target, or I'm going to still come down to negative 1.8 extension and I'll still hit my target. So basically, that's how Fibonacci retracement work, as you guys can see. So I'm going to drop the link on how to use Fibonacci retracement in the bio, so you guys can learn how to use Fibonacci retracement. So yeah, that's how to use support and resistance. It's very, very easy to use. It's not really it's not complicated. You just take practice over time. You cannot just watch this video and relax and not like check it out. You have to check it out to know how to use Fibonacci retracement and use support and resistance. It takes time. You have to master it. Although it looks easy, it still takes time for you to learn. So I'm going to show you how to I will catch my buy. Same thing. So we're going to go. Let's take this off. Okay. Let's look for a situation whereby I had to buy from here. So as you guys can see, I'm going to show you how to catch a buy here too. So I'm going to use my Fibonacci 100 extension from here, 0.0 in the higher high, market retrace, good, came down touching the 38, 50, 61, almost touching 78, which is not recommendable. When it touches 78, I usually just leave the trade and wait for another entry, which I don't really recommend that you guys like stay and let it hit the 78 extension. You usually don't hit that far. You usually get to at least 61 before you retrace back up. Sometimes it might be a very, very good trade. It hits the 38 extension and it buys back up. So that's how it is. So right now I'm going to buy from here in the week. Once I see it start retracing, when I see the wick start buying back up, I'm going to immediately buy. So let's leave this and let's put our stop loss. I'm going to put my stop loss around here. Sometimes I might just take it straight to 100 extension, but I'm going to put it around here. So I'm going to raise this to negative 27 extension. I have a 5 risk reward ratio. If I take it to 61.8 extension, I have a 6, almost 7 risk reward ratio. So that's how it works. Pretty easy to use. My trade, I always hold my trade long, so it takes a lot of time to play out. I'm a day trader, so I use the 1 hour, the 4 hour. Most times it's just the 1 hour. So my setup usually come around Asian section, Tokyo section, around there, whereby I go to sleep and I wake up and my trade has already hit TP. I'm always confident whenever I'm using my Fibonacci retracement. It always works, it always play out. Whenever I use my Fibonacci retracement, multiple touch and support and resistance together, I mix it, gives me my criteria, everything is good. As easy as that. Wow, what's that noise, bro? It's crazy. So yeah, that's how to use support and resistance. Very, very, very easy. I can show you more entries if you guys like. I'm going to just show you more entries so that you guys can have the courage and believe that this is the actual strategy you guys need, so that you guys can continue pushing your trading journey. So I'm going to take this off, look for another entry, or you know what, we're going to go to the 1 hour time frame and create more key levels. Probably there's no need to create more key levels. The key levels are already enough. As you guys can see, it's clean. You will not want your chart to be too messy, then you cannot see. I doubt any of you have sharingan, so you guys will not be able to see the market too clearly. So that's why it's not good to get your chart messy. If not, you might think you actually know what you're doing, but trust me, having a messy chart is not good. So right now we're going to look for entry. So much entry. I can't even tell which one to pick from. Okay, let's do this. Lower high right here. 100 extension in lower high. Bringing the 0.0 in the lower low, retracing, hitting the 50 extension, 38 extension, retrace back, hitting the 27 negative 27 extension. Easy as that. You don't need anything else. Like, simple as that. This is what we call a strategy. You don't have to think too much, you don't have to work too much. Just take your hands off it, let the trade play out. Easy 1 to 2 risk reward trade. This is it. Very, very easy. So basically, guys, this is how to use Fibonacci retracement. It's pretty easy, and this is how you use support and resistance. Even though you guys don't have to copy my Fibonacci or multiple touch, you guys can have your own strategy. I believe most people have their own strategy and they mix support and resistance together with it to make it work. So yeah, guys, this is how to trade support and resistance for beginners. Anybody that wants to learn how to use support and resistance, this is pretty easy. Just learn it. Multiple touch and support and resistance, they really work very well. Work together is great. So guys, if this video was helpful, guys, drop a follow and drop a like, please. Subscribe. I need some fucking subscribers, guys. Subscribe. So guys, drop a comment on what you think about this strategy of mine, and also tell me what you're looking forward to seeing in my next video. Tell me what you think about your strategy. Tell me what strategy you trade. Tell me what your strategy is so I can know and I can see what type of traders there are out there. And yeah, guys, one more time, subscribe. So yeah, peace out.